We live, baby. Okay, so this is hot off the press, October 14th, 2021. Coinbase just released on GitHub their digital asset policy proposal. And it's a way to regulate digital assets. It's a recommendation to the United States government on how to regulate digital assets. Now they give a bunch of recommendations, which we'll get into. I'll cover the three goals quickly: enhance transparency through appropriate disclosure requirements, protect against fraud and market manipulation, promote efficiency and strengthen market resiliency. All this can be summed up as keep the U.S. the leader in crypto innovation, and don't drive this out. Don't drive this new technology that we're still trying to mess with. We're still trying to figure out how it's going to work. We're still trying to build things with it. We're still trying to see what the future of it could hold. Don't kill it on the vine. They released these policy proposals on GitHub, which I think is pretty cool. And also Brian Armstrong, he tweeted about it and also had a Wall Street Journal opinion piece that he wrote talking about and summarizing the policy proposals. We'll take a few quotes from that, and we'll also dive into the greater digital asset policy proposal. And it can be summed up as this. Just in general, Brian Armstrong has been very hardo. He's the CEO of Coinbase. Coinbase is the leading crypto exchange in the U.S. He's been very hardo in asking the SEC, asking the government for clarity on some of the policies around crypto, because right now they're vague and they're using old financial regulations and old school financial regulations, or old era rather, to apply and trying to apply them to this digital asset framework, and it's just making it tough. It's making it tough. There needs to be more clarity so companies and startups can innovate, especially startups can innovate without feeling like they're going to get shot in the foot by the government. Boom. That's the hot take. Okay. This is Dick Lucas, No Gradient Podcast. You can search No Gradient wherever you get your podcasts. Also available on YouTube. Also on Instagram, Dick C. Lucas. On Instagram and Twitter, Dick C. Lucas, where I'll post when I have a new episode, a little summary of the episode so you can check it out. Dick@nogradient.com. Email. Please, on YouTube, like, subscribe to the channel. That'll help out. There's a link in the show notes to do that. Also rate on Apple Podcasts, Spotify. That would be very helpful. Leave a comment. That would be extremely appreciated. Yeah, let me know what you think. Honestly, let's riff on it and give me some opinions, or give me some feedback on what you think I should riff on. Generally, I will cover things that I find interesting. When shit hits the fan, like today, this just dropped. I'm like, okay, this is cool. There's not that much here. I can do a quick rundown on it, and we can riff on it. But yeah. Who can hit me up? It'll be epic. I think there's someone down here. Yo, what's up? How we doing? I'm just recording something. No, we're good. Sorry, I won't be too loud. Sorry. Okay, we're good. Yeah, there's some people down there. It's chill. I'm in an apartment building. I need to get a permit to do this. Anyway, okay. So let's talk about these recommendations before I go into some of the quotes from the opinion piece. Let's see here. Okay, so the first thing, one of the first things they recommend is designate one regulator for digital asset markets. So rather than have this spread across a bunch of different agencies, they just want one. Make it clear, have one organization to go to, have all the know-how under that one organization or that one regulator, and go from there. So that's their first policy recommendation. I should point out that I think they're just doing this. They're also doing this to just kick the conversation off. You know. This is they want it, Coinbase more than other exchanges, and from the beginning, and it's actually the reason that Brian Armstrong and his co-founder quit. And the co-founder, he started Paradigm, which invests in the crypto space, and also an investor in Numeri, which I've covered on the show. So they actually had I believe this is accurate. They had a falling out because his co-founder did not want to go the regulation route. Like the whole point of Bitcoin is that. Or it was this, that Coinbase was going to hold on to your keys, your Bitcoin keys. Because when you have crypto assets on Coinbase, you don't have the keys. Coinbase can seize those, and yeah, you don't really own them. I'm not worried about them getting seized. But one of the major selling points of cryptocurrency is that you can have your own wallet, no one can take it away from you. No one can get access. As long as you have the passphrase, no one can get access to it. You have it, no one else can. So when you store it on Coinbase, it's what's called custodial. Custodial means that someone else is holding onto the asset for you. You have to trust someone else. In this case, Coinbase or any exchange that you're using. And his co-founder was like, "Oh, bro, this is isn't this the whole point that we tried to get away from this? This is what banks already do. They're holding onto your assets on your behalf. Why are we doing this?" And Brian Armstrong, I think smartly, we live in the real world. You got to engage with governments. You have to, especially with new technology. There's a real world you have to operate in, and engaging with our elected leaders and our governing bureaucracies that our elected leaders have created is, I think, an excellent strategy. And I commend Coinbase for going hard mode on doing that. Okay, so as I said, they want to designate one regulator for the digital asset markets, and also a dedicated self-regulatory organization. So I didn't know what this was. I just had to look it up. A self-regulatory organization. I was like, what the fuck is this? You can self-regulate yourself. Doesn't have to defeat the whole point? Well, there's a couple famous ones you might have heard of. The New York Stock Exchange is an SRO, a self-regulatory organization. So it's a group. It's kind of a group of members. It can be that come together in an industry to help kind of police themselves and keep the market fair. FINRA is also another one, the Financial Industry Regulatory Authority. So if you're in the business of selling securities, you have to register with FINRA. So your stockbrokers, for example, have to do this. And it sounds like, it's based on my limited reading of it, it sounds like it's a quicker way to self-regulate, and it takes some stress off the government. And the government, in some cases, does have has a tight relationship with these. And depending on the SRO, these are the only two examples I'm giving. I don't know of any others, but some have. There's probably a real estate one that comes to mind. In some of them, government has more of a hand in it than others. Okay, let's continue. So, marketplace for digital. Okay, so marketplace for digital assets. You're gonna hear me say MDA. This is how they shorten, basically exchange. So where you go buy cryptocurrency, this is where they call it an MDA. Should be authorized to perform the full life cycle of digital asset services, including digital asset trading, which you know of, transfer. So I want to transfer money from my Coinbase account to any other exchange or to someone's wallet. Custody, that's just them holding on your crypto assets. Clearing, don't really know what they mean by that. Money payment, staking. In the case of many coins on Coinbase, at least you can stake them. As we've talked about with Ethereum, that's moving to proof of stake. You can stake your coins and actually earn 5% interest on your Ethereum right now. It's locked up because Ethereum 2 hasn't launched yet. But you can lock up and stake your Ethereum on Coinbase, not Coinbase Pro. They're trading platform. They're more higher featured trading platform. But on Coinbase.com, their blue app, you can stake your crypto. Borrowing and lending, and this is something that came up recently when Coinbase was trying to release a lend program, and they just didn't, because they didn't have enough regulatory oversight, or they didn't have enough regulatory kind of clear direction. And the SEC reached out to them and said, "Yo, careful with what you're doing." And I think this is where some of this is spawning from. And then also, and related incidental services. So I think just a catch-all they want a marketplace for digital assets to be able to do all this stuff, and without having to, get a separate, license for every single one. I think they just want a catch-all, because it's very likely that any MDA that is created is going to be taking part in all of these things. Okay. The treatment of platforms and services that do not custody or otherwise control the assets of a customer should be treated differently. That's another thing. Okay, so the 3 goals, as I said before at the start, we'll start with the first. Enhance transparency through appropriate disclosure requirements. So digital assets that are well established, broadly understood, and decentralized, like Bitcoin and Ether, should not require ongoing disclosure. Satoshi Nakamoto isn't saying anything about fucking Bitcoin. He, she, they is gone. There's a history of decentralization there with Bitcoin that with the community and the history of it. There shouldn't need to be ongoing disclosure. I think that totally makes sense. And Ethereum, same way. Not as much of a track record as Bitcoin, but similar idea. Now, newer cryptocurrencies, especially ones where the creators are holding most of the coins at the beginning, or depending on how they go about doing that, they should have higher disclosures requirements. The MDA should require higher disclosure requirements for those. Okay, digital tokens that are earlier in the life cycle, not yet decentralized, should have a minimum set of disclosures. Yep. Different disclosures for stable coins. So they carve out stable coins and say that these should have different disclosures altogether. One of which being, which we talked about in the last one of my most recent podcast episodes on Tether. So these stable coins should have different requirements. For example, what are the assets that are on their books that are backing these stable coins? That's something that is different from an Ether token or a Bitcoin, right? There's nothing backing them. There's no fiat currency. There's no hard real world asset backing them. They're out in the universe on their own, and it's a beautiful thing. Okay, so disclosure requirements must be flexible, so they can be readily applied to a wide range of digital assets, and so they are resilient in the face of future innovation. So there's a whole bunch of things. I mean, for example, just decentralized finance, NFTs are the things in the last few years that weren't around 5, 6, 7 years ago. So we need to create a framework. Then there's going to be a lot more shit that is going to hit the fan in the next 10 years that we've never even thought of. And that's the beauty of this space, and that's why I'm so interested in it. It's literally primordial soup of beautiness, okay? All this stuff's happening. So they're recommending a flexible framework to account for that. Okay, the second goal, protect against fraud and market manipulation. So make available disclosures, requirements for how trades happen. Certain requirements on if you put a trade in, how does it get processed? How do you get matched with someone? If you put a buy order, how do you get matched with someone that has a sell order? How do you do that? Let's keep that transparent. Let's make there should be requirements around that. Also, they should be able to monitor trading activity to enforce the rules. And that last point I just made. Rules should include requirements for asset safekeeping and use to address financial stability by requiring MDAs to maintain adequate capital and liquidity, to facilitate customer portability, to promote interoperability. Okay, so this last point, portability and interoperability, I should not, just because I have Ether on Coinbase, I shouldn't have it locked there. For example, on Robinhood, if I buy Ether, buy Bitcoin, you can't send it anywhere. It's literally just staying on there and trading. I think on Venmo as well. There's no interoperability. You have to sell it, take your money, then buy it again on another exchange. That's bullshit. There should be requirements around this that your Bitcoin. Imagine having a bank. I have money on my bank, or money in my. Well, I guess this isn't a great example. Well, no, I mean you have Charles Schwab's trading account. You can send your shares to E-Trade. I've done that before. It's kind of a bitch of a process. I forget what there was some shit involved in it to be able to transfer them. It's not like transferring Bitcoin or Ether to another exchange with just a wallet address. It's a bit of a thing, but you can at least do it. And I'm sure there's requirements around being able to do that. Adequate capital and liquidity. So if shit hits the fan, if there's a huge run on Bitcoin, like these exchanges need to be able to manage that, kind of black swan trading activity. Okay, so a couple other things that should be required. The bank, they should other requirements. So BSA, which is the Bank Secrecy Act, which is to prevent money laundering. Then other AML rules, which is kind of under the BSA, which is just shortened as AML. Then also SAR, which I just learned about, suspicious activity reporting. So if someone's doing if a wallet that may or may not have been used in terrorist financing sends money to Coinbase, and they're trying to sell and convert that to fiat, US dollars, then Coinbase should have a right to report that. In fact, they should be required to report that. Also, OFAC, Office of Foreign Assets Control. And one of the things this regulatory thing is used for is to prevent, to enforce sanctions, for example. If we have sanctions against several, there's several Chinese businesses that we have sanctions against, Russian businesses as well, Russian individuals actually. We shouldn't allow them to create a Coinbase account and trade cryptocurrency or move their assets onto cryptocurrency. So that the OFAC prevents that. Never knew it existed, but seems reasonable to me. Again, I'm laying it out here. I'm laying out with it. Okay. MDAs must be interoperable with products and services across the crypto economy. So we've touched on this. I think it makes total sense. You shouldn't have your assets locked where you purchase them. This makes total sense. I think it's, again, I think they've done a great job with this. It's hilarious. I was expecting some 70-page boomer PDF, and what we got was a GitHub a markdown file, and I'm like, what the blunt smoke? This thing's like a few pages, and I was like, okay, this is chill. I can rip a podcast out of this. It's just crazy. So it's we'll see where it goes. You can contribute to it actually, which might be That might be kind of beast. I'm trying to think if there's anything on top of my head that I saw there. I'm like, submit a pull request that, yo, this should be different. Honestly, a lot of this stuff is out of my wheelhouse, so I'm not really going to try to do that, but that would be epic. Maybe you will. Maybe you listening will. Okay. Then there's the Wall Street Journal piece, which I want to take a few quotes, 3 of them, that Brian Armstrong, with this announcement, also released his opinion piece. So he says that, it's honestly, it's a great piece because it gives a rundown of what the, what is this thing called again? The digital asset policy proposal. It gives a rundown of what that covers, and also just some thinking around it and some background of cryptocurrency in general. Crypto. Okay. So it adds renewed transparency to our financial system through blockchain technology and challenges undemocratic political regimes, which can seize bank accounts and close businesses. It lets people avoid high currency exchange fees and barriers to remittance flows. So this is just an example of what cryptocurrency allows. Now remember, cryptocurrency is extremely transparent. Now there's things like Tornado Cash and there's other ways to prevent that, but on the face of it, the standard way it's used, Bitcoin, all the transactions are public. Now you don't necessarily, anyone can create a wallet. You don't necessarily know who created that wallet. That's true, but they're not anonymous. All the transactions are public. So this is a very powerful thing, and I think we're just grappling with what are some of the things we can do with this. For example, a nonprofit has a wallet that's public. You can see where they send their money. For example, maybe especially for overseas. In fact, we just talked about this with the Pandora Papers. We're giving aid to the King of Jordan, right? We're giving aid to the country of Jordan on the order of billions of dollars, and he's buying mansions in Malibu. At the same time, if we're giving his aid country, it's very likely he took that aid money, boom, bought mansions with it. Cryptocurrency is an example of something that we can ensure because we can track. We can track where the coinage goes. So, and not to mention remittances. Remittances are a classic example. Someone moves to the United States, Mexican moves to the United States and wants to send and works in the U.S. and sends money back home. Well, there's fees. I think the standard, well, one of the major ones is Western Union. They want to send money back home, and there's fees associated with that. It's called a remittance, and it's a multi-billion-dollar industry all over the world. People do this, and they're getting fleeced by fees because they're on the payment system. The way it works now is clearinghouses, through banks, through inconsistent rules across countries. It's a nightmare. This cuts through all that. Now, granted, the fees are pretty high on Ethereum right now, for example. But there's layer 2 solutions. But there's, in Bitcoin, I think, what is that, $3 to send any amount of Bitcoin? So, which then, if, there's the whole problem of then having to convert that cryptocurrency into actual fiat currency. Because if you send someone back home in Mexico, you send them Bitcoin, well, they're not going to be able to buy anything with Bitcoin. Most likely they're not. They're going to have to convert it into pesos. So that's another thing. There's kind of a last mile piece to this. Okay, so next thing. Our policy proposal is about enabling more crypto startups, getting the average consumer access to better financial services, and helping America stay at the forefront of innovation, entrepreneurship, and technology. I totally buy this. Yeah, this is absolutely what it's about. Yes. Our existing financial regulatory system doesn't work effectively for the open, decentralized networks that crypto has created. Regulation was built around a series of financial intermediaries, transfer agents, clearinghouses, and traditional brokers, which don't play a part in crypto transactions. I heard this funny thing that you think Bitcoin's complicated. Try explaining how a dollar goes from here to a bank in Mumbai, to a bank out of Mumbai. It's an absolute nightmare of hops. I don't know how any of that works. I know how Bitcoin works. Compared to that shit show. So it's an interesting point. I dig it. Washington can set a new global standard for enlightened regulation and further the cause of economic freedom. I love this. This is especially with China just banning the mining, banning mining in China. U.S. is now the leader in Bitcoin mining, and that we have an opportunity here. What's so interesting is many people on the left. Elizabeth Warren, famously, I think she's been the strongest one, has been poo-pooing cryptocurrency and saying, dogging it. But beasties, do you understand? Like, do you believe in economic freedom? Do you believe in a system where people can have control, individual liberty, and sovereign control of their assets? especially if we're talking about exporting American ideals to the rest of the world. We should be saying cryptocurrency is amazing. Cryptocurrency is beautiful. You know, many on the left who can attack, as they should, rightfully so, the Fukin crazy system that are, you know, a financial system that's very complicated, backroom deals, blah, blah, blah. There's all that. Yeah, I get all that. Lack of transparency. Here comes cryptocurrency, which this is, yes, there's obviously ways to, there's shit coins that come out. People can fleece people, of course. And that's why we need regulation around that. We're not saying this should be the Wild West, but what we are saying is we need to nurture this and not just say, mining bad, crypto bad. Yeah, because the Fukin, the bank system in the U.S., which we can trust, many countries in the world, they can't trust their banking system, which we can trust relatively. Like you have money in a bank, you're not worried that the bank's going to go kaput. But the banks, exactly, people on the left, the banks, you're looking at who this is gonna upset, who this is going to displace on many levels. I think it's the banks. So the banks, people on the left, you've been dogging the banks for decades. Now you have something that could actually unseat some of their power with things like decentralized exchanges, even just the flow of money, and you're just going to shut it down right away out of pocket. Well, you can't have it both ways. Can't have it both ways. Podcast. Boom. I like that. Possible name. Okay, everyone. This was chill. Brian Armstrong, Coinbase. Keep doing your thing. Huge supporter. Famously, I'll share the story. I've shared it like 50 times on Twitter, but I interviewed at Coinbase. Didn't get the gig, but I had like a Coinbase master plan, which I published on nogradient.com, and I was in there eating with the recruiter, eating lunch, and I saw Brian Armstrong just go up, nonchalant, go up to the, I'll never forget it, go up to the buffet line, grab his food. No one was with him. He was chilling. And I was like, fuck. I should just ran up to him and say, yo, shake his hand, boom, honored to meet you, honored to be in the building. Here's my idea for the future. Anyway, some of that stuff is actually, it wasn't crazy groundbreaking stuff. Some of it has actually come to pass, which, you know, it's kind of cool. I wrote it, I think, in 2018 maybe? Anyway, epic company, big fan of Coinbase, been following them since the beginning. Yeah, it's and I really appreciate what they're doing. They're trying to engage with our regulators, with our government. That's the way to do it. That is the way to do it. So thank you for pushing this forward. Thank you, everyone, for listening. This is Dick Lucas, No Gradient Podcast. Search No Gradient wherever podcasts are available. Dick C. Lucas on Twitter and Instagram. Email me, dick@nogradient.com. Hit me up. Yo, hit me up, bros. Let me know if you want me to cover something. Let me know if you like an episode, give me feedback. Subscribe on YouTube. Like the vids. I have the YouTube link in the show notes to my channel. Please hit me up. Want to hear about it. Also rate on Apple Podcasts, Spotify, wherever. Comment, like, subscribe, 5 stars. You know the deal. Thank you, everyone. This has been Freighta Chills.